Hi, this is Mal from the Money Study, bringing you another episode in the Ultimate PSS Education Series, and we're up to number 18. This one's all about the surcharge amount. Now, this won't affect many people, but please make sure that you check to see whether you are indeed impacted by this. Before we carry on, there's the disclaimer: facts and figures, information only, not advice. You will find out whether you've got a surcharge debt on your annual statement on page 6. You will see this little section there that then says, do you have a surcharge debt? Now, hopefully for you, it's 0, in which case you can basically stop listening. Check your statement. But if you do indeed have an amount on your statement, you have got a surcharge debt, and we need to address the situation. A surcharge debt simply relates to the old tax rules. It doesn't exist anymore. It was abolished in August of 2005, but effectively what it was, just an extra tax for superannuation purposes for people on higher incomes there. Now this surcharge or tax, whatever you want to call it, effectively, if you've got it, even though it was abolished, you've still got this debt hanging around and it needs to be repaid. It effectively grows every year with the interest applied to it. I believe the interest rate is the 10-year bond rate, effectively. So, yep, this thing's just going to get bigger and bigger and bigger. And so we really need to address to get rid of it so it just doesn't get out of hand. Look, you can pay it out now. So you can actually just contact PSS, tell them you've got a surcharge debt. They'll give you all the BPay numbers and so forth that allow you to do this, and you can effectively abolish it and get rid of it now. Or you could indeed just have it subtracted from your lump sum benefit at the end of it. Which obviously is reducing your PSS benefit, so you've got to weigh that up whether that's sensible or not. Or you can indeed have it subtracted from your pension over time. So you're reducing your pension every year by a small amount based on an annual payment, effectively based on your, I believe it's based on your life expectancy, because there's a series of factors. You can go to a CSC fact sheet on surcharge debt, and you'll see all the factors depending on how old you are at the time and so forth as to what your pension would be adjusted by. But it would obviously reduce your pension over your lifetime, simply because you've got to pay this debt back. I suppose you could look at the fact that, a debt in 25 years' time, if you're paying it off over time, it's not going to be a huge amount. But to say, depending on the numbers and what your situation is, whether you can afford to pay it out now or not, clearing this thing to solve the problem could be something sensible, or depending on the numbers, just paying it over time could indeed be something you might want to consider. If you obviously disagree with the assessment, you think, well, I don't believe I was on a higher income, at the time, or you don't think what the numbers just don't look right, and depending on what your period of what you were doing at the time, you can certainly have a chat to PSS about it to find out, can they really pinpoint how this all happened and what were the numbers. You can get it reconsidered, or you can actually put a formal objection into the ATO if you really believe that these numbers are incorrect. So if you're dissatisfied after all of that, yep, you can even still complain to the Superannuation Complaints Tribunal, but you'd have to be really sure that you've got your numbers right, they've got it wrong before you'd go down that path. But get the information, have a look, and assess it. But generally speaking, it's going to be a debt that shouldn't be too big, hopefully. But one way or another, this thing needs to be assessed and attended to. But let's hope for you that your surcharge debt just doesn't exist. We'll talk about other things relating to your PSS in future episodes.